Tesla stock without a doubt has been on a huge tear over the past few months. We've seen Tesla stock go from $200 per share to over $2,400 per share before adjusting for the recent split. While this has been a massive run, Cathie Wood, the CEO and CIO of ARK Invest, still believes the stock is undervalued. In this video, I'm gonna go over Cathie's bull case on Tesla stock and why she still believes that the stock is undervalued. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. It's important to understand that Cathie is looking from a 5-year perspective. Tesla stock could go up 50% or down 50% over the next few months, but all of that isn't important to Cathie's point of view. My point is that Cathie is looking at the long term and not the short term. Imagine where Tesla will be in 5 years. Do you see Tesla's growth slowing down substantially, or do you see solar and EVs growing exponentially? The second question is what Cathie sees in Tesla.
And obviously you're a big fan of Tesla. Why do you continue to like this idea?
We still think it's way underestimated, even with the massive move it has had. It hit $350 at the bottom in March, and is now 1900 roughly there.
Right, yeah, it went over 1900 and fell back a little bit today.
Yes, and even with this, our bear case for this stock has been 1500. Now that's a 5-year price target.
Okay.
That assumed that Tesla would lose market share. We first made this analysis in 2018. 2018, Tesla had a 17% share of the global EV market, including China. Last year, I think I've got this number right, they had 23% share.
The point that Cathie makes here is extremely important. Cathie priced in a market share decline for Tesla in order to reach a bear case of $1,500 per share pre-split. However, since then, we've seen Tesla continue to take market share from the rest of the EV companies. Cathie is indirectly pointing out that her bear price target is outdated.
We assumed for our bear case that Tesla would lose market share from that 17% and go down to, in our base case, 11%, and in our bear case, 6%. Instead, what has happened, it went up to 23% last year, and now I think we're up to, this is rough, as of mid-year, about 26%. So it's still increasing, has 79 to 80% share in the United States. And even in China, where I think there are 150 electric vehicle manufacturers, crazy. Tesla had in June 21% of that market. Think about that, 150, and Tesla is 21%. Now,
it's incredible, yeah.
It is incredible.
For years, we've heard that the EV competition is right around the corner, and we're still hearing it today. Nonetheless, behind the scenes, Tesla's market share is still continuing to increase, and that bolsters Cathie's price target substantially.
So that's the first thing. So it's not losing share, it's gaining share. And in that bear case, we have nothing for autonomous at all, and nothing for ride hailing. Ride hailing, we do think they're going to start a ride hailing service this year. Wow. They're going to compete against Uber and Lyft. We believe if they do that, and again, we think they will, we think that the bear case is history.
Given that Cathie is a prominent Tesla bull, I'm sure she has some information, some clues as to how Tesla will initiate its ride-hailing service. As we all know, Elon Musk has been looking to start a robotaxi ride-hailing service for years. However, Tesla's FSD certainly isn't ready yet, and even if it was, it would take years for it to pass government regulations. What Cathie is talking about here is if Tesla would launch its own Uber and Lyft type ride-hailing service where current Tesla owners would taxi people to their destinations. This makes sense from a logical perspective. If Tesla were to suddenly roll out a robotaxi network, people would likely be skeptical of Tesla's ability to create a ride-sharing service. On the contrary, if Tesla were to start with its human-driven network first and then scale up to a robotaxi network, then people who are already using the human-driven network would be more willing to trial a robotaxi. Along with this, Tesla will also be able to utilize what is known as the Tesla effect. When someone goes inside a Tesla for the first time, a transition begins to occur. In the first few minutes, people may find a Tesla interesting. Give them a few more minutes, and sooner or later, those people will be interested in buying one. With the release of a Tesla ride-hailing service, the number of times the Tesla effect would occur would increase by a significant amount. In addition, Tesla would be able to obtain some passive income without putting in extra work. This will be important for turning profits despite massive R&D expenditures. Now, Cathie has likely spoken to a prominent Tesla executive who ran her through their plans, and the ride-hailing service was likely part of that. While this sounds great in theory, the initial cost for Tesla is far too expensive for the majority of the population. In the following clip, Cathie explains how Tesla could actually do a business model similar to a rental car company for their ride-hailing service. I could be totally wrong about this, but it sounds like Cathie has spoken to a Tesla executive about this plan.
Now, with the legislation in California, and obviously Uber's been affected with it, having to have full-time employees, would a Tesla be affected by that? Would their ride-hail network be affected by that? Or it's just, these are Tesla drivers and they're just taking advantage of their Tesla car and connecting with other drivers and driving from one location to the other?
Well, Tesla could actually hire these people, make them full-time employees, because the total cost of ownership for a Model 3 today is about 30% less than a Toyota Camry. Mostly because of the residual value. Okay. In fact, I've seen some Model S's selling for 90% of what people bought them for. And we think for Model 3s, it'll be even better if those become the ride-hailing network cars. So what's going to happen? Tesla will say to a person, join us, and for $5,000 down or $7,000, we'll let you buy a Model 3. You can work the rest of the price off. And oh, by the way, it's going to be cheaper for you than a Toyota Camry.
You might be surprised that a Tesla would cost less to own than a Toyota Camry, and that's where Cathie is referring to Gene Munster's calculations. Gene Munster is a famous fund manager of Loop Ventures who found out that Teslas are cheaper to own than Camrys because of their low maintenance costs and the fact that Teslas retain a large portion of their value over time. Last but not least, a Tesla ride-hailing service would bring data for research on full self-driving.
So they will do that. And then what does that do? If they drive for 50% or 60% of the day compared to the 5% of the day that I drive, and less than that now that I'm not driving to the train station, they're going to be delivering real miles data, real miles traveled to Tesla to feed its autonomous network. Wow. So we think they have somewhere between 14 and 15 billion miles worth of data. Just like what I mentioned with the genomics-based data in Vitae, same is true in the autonomous taxi network. The winner is going to be that company with the most data and the highest quality data and the best AI, deep learning, neural network expertise. And they're doing some very interesting things with video labeling in the AI area, which we think has them miles. I mean, there's just no one's even close. No one, Google's not close, Cruise Automation's not close, no one's close. And even in China, Baidu was supposed to be the autonomous taxi platform.
Yeah.
You know, it's interesting.
All of this is a bonus to the fact that Cathie still thinks Tesla stock is still undervalued. As of today, her base case for Tesla stock in 5 years is $7,000, and all of that is without ride hailing. Also, keep in mind that these aren't just random numbers being thrown around. Cathie is calculating these price targets based on actual sales number predictions.
We're not worried at all. And in fact, our base case, which is in the 7,000 range, this is again a 5-year target. Our base case will also go up if they do launch this ride-hailing network, because we have not included that. And in our base case, we have simply assumed that they keep their share from last year, not lose it. I believe I'm right. We may be assuming that it does go back to 17%. I'll have to check on that. But nonetheless, so we're at 1,900 now, 7,000 before ride hailing. It will go up with ride hailing. Our minimum hurdle rate of return for any stock in our portfolio is 15% at a compound annual rate over the next 5 years. That means a doubling over 5 years. So at 7,000 plus versus 1,900 now, we're still well above that. It's still one of the most, we believe it will drive more performance than most stocks in our portfolio, even today.
You just heard that right. Cathie still sees the opportunity in Tesla as far better than any other stocks in the market. Of course, we likely won't see Tesla stock go up 500% like it did in the past year, but even a 200% return over the next few years is very enticing. Now there's still more factors that could potentially drive Tesla stock up even more over the next 5 years, and the largest of them all is full self-driving. This leads to Cathie's golden goose target of $22,000 on Tesla stock before the split. If accounting for the split, this would mean $4,400 per share.
Now, one of the criticisms with Tesla and the self-driving cars, or that initiative, is they've kind of taken a different route. They've maybe try to be a little bit cheaper on some of the things, or doesn't analyze as well. Because I guess a few years ago with Mobileye, they kind of had a falling out with them, and so they were going to do it themselves. So do you see any concerns with that, or you still think that these guys are definitely going to be the first ones, or most likely going to be the first ones to really get to that stage 5, I guess, with self-driving?
Yes, I do believe. Actually, Elon is saying that he's been driving to and from work pretty much without, in the prototype of their full self-driving car, pretty much without having to intervene. So I think what I love about Elon Musk is he's the guinea pig.
Yeah.
He's willing, right?
Right.
And I believe him when he says that. So they probably, because of the billions of miles of data, they have seen more corner cases than I think most auto manufacturers and technology companies will see in the next 5 years. So it's going to be very tough for anyone to catch up to them.
We've talked about many factors in the future of Tesla, but I believe the most overlooked factor is Tesla insurance. As of today, analysts expect that Tesla will begin selling millions of vehicles in the future, especially with the release of a compact car. However, what they almost always overlook is that Tesla can insure a large portion of these vehicles. Today, Tesla insurance makes up a small portion of Tesla's profits. Nevertheless, when Tesla begins to have tens of millions of vehicles on the road, being able to insure all these cars is going to be a huge profit machine. After all, Tesla has far more data than any other insurance company in the world. The company will know how aggressive someone drives, how often someone changes lanes, and practically everything you can think of. In the insurance world, data is king, and analysts are not pricing this in.
So now I found it interesting, maybe it was 6 months ago or a year ago, when they announced that they were going to get more into the insurance business too. How do you think that's going to affect their model?
Yeah, I think this will help them on the ride-hailing side of things.
Okay.
I remember talking to Uber drivers, and the insurance costs were killing them. I mean, I really felt terrible for them. They were getting, the hikes they were seeing were enormous. So Tesla knows more about how its cars are going to perform with autopilot than any insurance company will. So Tesla will self-insure. We're pretty sure of that. And so the insurance costs are going to come down dramatically. When NHTSA did the analysis on the first fatal crash, the Model S fatal in Florida, it took them 6 months to do that study, but after they finished, and remember, this was about 3 years ago.
Yeah.
Even NHTSA stated in its report, I may not have this exactly right, the wording, but they said that anyone driving a Tesla car with autopilot was going to experience was going to be 40% safer. Now, was it 40% fewer accidents or fatal accidents? I don't remember, but 40% safer. Any insurance company, knowing that, would price accordingly. they're not willing to do that right now. Insurance companies are a little bit behind the times. They don't understand this autonomous concept. Tesla does, so it can self-insure.
Cathie didn't have time to talk about solar and energy in this interview, which also makes up a large portion of her bull thesis. We all know that the oil market is huge, as we've seen trillions of dollars be made in the oil business. As solar and battery costs inevitably decline with more research, Tesla will be able to continue to steal more and more market share from traditional oil companies. The potential here is enormous and is another giant dent in the short seller arguments that value Tesla as a car company. Let me know what you think about Cathie's bull thesis on Tesla stock in the comment section below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.